In this webinar, we'll explore key topics to help you understand and navigate the Retire Ready New Jersey plan. We'll begin with a comprehensive overview of Retire Ready New Jersey. Next, we'll examine a comparison of Retire Ready New Jersey versus alternative plans to highlight the distinctions and advantages. We'll also discuss upcoming deadlines that require your attention to stay on track. Finally, we'll cover employer responsibilities to ensure compliance and support your employees effectively. This session is designed to clarify any questions and guide you through the process of managing retirement benefits with confidence. At Fiduciary Pension Partners, we're an independent registered investment advisor and are dedicated to delivering complex retirement plan solutions. We offer fiduciary support, fee benchmarking, investment analysis, target date fund consulting, and plan design assessments to enhance participant retirement outcomes. We are excited to have Matt Golden here with us now, and I'll hand it over to Matt to kick things off.
Thank you, Rita, and good morning to everyone. I'm Matt Golden with Vestwell. Vestwell is a financial technology services company who provides the savings platform for great partners like Fiduciary Pension Partners, as well as for state retirement programs. So I'm happy to share more about the Retire Ready program and working together with our partners, Fiduciary Pension Partners. So just a bit about Vestwell. Vestwell was founded in 2016, and we've grown very fast because we offer a simple, modern technology platform for business owners like yourself and for partners like FPP. So what we provide is the platform, the proprietary technology that makes it simple and efficient for people to save in what has been traditionally a complex world of saving programs. Not only do we offer qualified retirement program savings, but we also partner with states who have passed a law to create a state savings program. So we're going to talk a bit more about that in the next few slides. But Vestwell is the administrator of the Retire Ready New Jersey program. And you can see a bit about the statistics there about who we are as a company.
Well, fantastic, Matt. Thank you very much for the introduction. And again, get to the heart of the presentation. What is Retire Ready New Jersey? And because of your background, being familiar and being integral in the launching of Oregon, can you walk us through what is Retire Ready New Jersey quickly?
Certainly. So states like New Jersey have passed a law that essentially says that, well, our goal is to close the savings gap, the retirement savings gap in our state. And what the law says is that any business that has 25 or more employees in the state are now required to register for the program or to start a retirement savings program for their business and for their employees. And essentially, if you have been in business for more than 2 years, and you have 25 or more employees in the state of New Jersey, then now you are required to take an action.
Yes, and a couple of points I want to bring. Obviously, this is designed to help those small business owners bridge the gap for their employees. But a couple of other points. Number one is, even if you have a retirement account or you have more than 25 employees, you must do something. Again, if you have 100, 200, 300 employees in New Jersey and you do get that letter from the state of New Jersey, do not throw it in the garbage and just assume, hey, I have a retirement account, I don't need to do anything. Yes, you need to do something. Everyone, regardless of whether you have a plan or you don't have a plan, you will need to either register and exempt your organization, or you will have to do one of what Matt mentioned, is either set up a plan or enroll into the New Jersey plan. So this does create now a situation where you need to make a decision. Again, this is the time to do your due diligence, find out what your goals are as an organization, and decide which way you would like to go in terms of implementing the Retire Ready or possibly implementing another retirement account. Now, the plan specs, Matt, do you want to cover the plan specs since you're very involved in
Sure.
setting up the plan?
Yeah, absolutely. So, um, the way that the Retire Ready New Jersey plan works is that contributions are made by employees through automatic payroll deductions. So what that means is that employees are enrolled by you, the employer, and then for those employees who do not opt out, they are auto-enrolled, which means that they're automatically enrolled in an IRA account, and then you at a 3% contribution rate from their paycheck. So employees have the option to opt out at any time, but if they take no action, they're automatically enrolled. And so what that would mean for you as the business owner or working with your payroll provider is that you would begin making 3% payroll deduction from their account and submitting that to the Retire Ready New Jersey program. Vestwell, in our role, we provide the technology for the program, and we would work directly with you to submit those contributions and to track those employee accounts. And one key thing to note is that employer contributions are not permitted into the Retire Ready New Jersey program, only employee contributions.
Yes, and very specifically, there are no flexibility with regard to the Retire Ready. It is the program as structured by the state. So again, there is no flexibility in terms of if you do want to make a change. We did put up a comparison slide here, and we're not going to go through all of the differences. Obviously, the most important decision here is figuring out what are your goals as an organization and figure out whether or not the Retire Ready program is designed to match those goals. There are a lot of other alternatives, not only 401k plans, profit sharing plans, but there are a lot of other alternatives to look at. But certainly what you want to do is look at what are your goals. So first and foremost, Matt, what are the contribution limits for the Retire Ready program?
Sure. So the Retire Ready program enrolls employees into a Roth IRA. And Roth IRA or any IRA account has a contribution limit on an annual basis. So the contribution limit for a Roth IRA in the Retire Ready New Jersey program is $7,000 per year, unless you're over 50, in which case it's $8,000. So the maximum contribution for any employee into the Retire Ready program on an annual basis is currently $8,000, which is set by the IRS, who sets the annual IRA contribution limit amounts.
Yes, and other programs could increase that deferral amount up to 30,500, or a combined employer and employee contribution of up to 69,000. So about 10 times larger contribution if your goal is to make higher contributions. So Matt, how about tax savings? How does the taxes work for the Retire Ready program?
Right. So, because the Retire Ready program uses a Roth IRA, contributions go into the IRA account on an after-tax basis. So, it's not a tax deferral contribution, it is an after-tax contribution into a Roth IRA.
Yes, and potentially in other retirement accounts, you could choose tax deductible contributions, i.e. pre-tax, where you take the tax deductions now, or you could choose Roth. So just that flexibility of having either tax deductible contributions or Roth contributions. Like we mentioned, the plan design is what it is structured with Retire Ready. With other retirement accounts, you could structure eligibility, you could structure entry dates, you could structure profit share contributions, very flexible in what you would want to do in an outside or a customized retirement account. Automatic enrollment is part of the Retire Ready program. That could be part of a outside program. Certainly, if you wanted to add automatic enrollment, you could, but it wouldn't be necessary. Let's quickly just talk about employer contributions. I know this, we mentioned it in the past, but let's just mention the Retire Ready program does not allow for employer contributions. In other plans, you could have employer match contributions. You could have employer profit share contributions. So there's a little more flexibility if you're looking at other investment, other retirement accounts. Matt, can you talk about the investment options that are available in the Retire Ready program?
Sure. So the Retire Ready program is overseen by the New Jersey Secure Choice Retirement Savings Board, which is administered out of the New Jersey Treasurer's Office. And that board is responsible for choosing the investment options. They've chosen what are known as passive target date index funds from the Vanguard company. And so that is a set lineup of investments that are matched, a target date fund that are matched based on the saver's potential retirement age.
Excellent. And again, if you were to look at other outside retirement options, you could look at active managers. You could look at potentially having sector type funds, specialty, technology, commodities, real estate, healthcare. You could also look at self-directed brokerage if that would be an option that you're looking for. Another couple of quick bullet points that I do want to stress just because they are very important. Can I get a loan in the Retire Ready program?
No, the account is a Roth IRA, so it's after-tax contributions. So individuals can withdraw their contributions without paying any tax or penalty because they've already paid taxes on those dollars, but no loans are available.
And again, just remember with the Roth IRA, there is that 5-year window and 59 and a half. You must hold it at least 5 years or 59 and a half, or it is not considered a qualified withdrawal where you would pay penalties. Again, with the 401k or other retirement accounts, you potentially could get a loan on your own money up to 50% of your vested balance, up to $50,000. Again, most of these retirement accounts are designed for retirement. But again, if you would like to put a down payment on a house, the 401k program, getting a $50,000 loan out of your 401k or retirement account tends to be a great solution. Couple of other points that I just want to make. Obviously, costs with the state program, it's designed as being a very low cost alternative. Again, with other retirement accounts, there are higher cost, lower cost alternatives, depending upon what you want to do and how you want to structure the program. But one quick caveat is there are employer tax credits that are currently available. Those are up to $5,000 per year for the first 3 years that you set up a retirement account. Now, again, the Retire Ready program doesn't have any hard dollar costs that you need to pay to set up the account. But if you were to set up a 401k, a profit share, or another retirement type account, you could offset those costs for that $5,000 credit for the first 3 years. And again, a couple of other components, compliance and fiduciary. Obviously, the Retire Ready program is designed, again, where the employer only responsibility is to fund those contributions. Obviously, for new hires, they would have to automatically enroll those new hires. So there is some work for the organization. But again, depending upon what other retirement vehicles you would be looking at, you could have a fiduciary advocate on your side. And again, you could have some compliance reporting as well. So on the next slide, Matt, why don't you talk about how the Retire Ready works with who is eligible to participate? This is a little different than we're normally used to.
Sure. Thanks, Steve. Yeah, this is where we get a lot of questions about the Retire Ready New Jersey program or any of the state programs that are up and running. So it's employees who are age 18 or over who've earned taxable wages in the state of New Jersey. And so what that means is if you have had 25 or more employees at any point in the prior year in the state of New Jersey, who earned money in the state of New Jersey, then you as a business are required to either participate in the Retire Ready New Jersey program or to offer a qualified retirement plan. It doesn't just the Retire Ready New Jersey program doesn't distinguish between full-time or part-time. It's any employee that has earned taxable wages in the state who is over the age of 18. And then we get questions about what about seasonal employees? So the way that the Retire Ready program is designed is if an employee works for more than 90 days, then you're required to enroll them in the Retire Ready New Jersey program. So those are really the key components about who's eligible to participate and the type of questions that we typically get around that subject.
So this may be an opportunity for some companies that have more part-time employees. If you're looking at other retirement vehicles, you potentially could, exempt them out of your retirement account if they are leased employees, non-resident aliens, obviously seasonal employees, part-time employees. So that might be a decision factor where you may want to look at establishing a separate retirement account because you do have a lot of those part-time or seasonal employees. Matt, this is the most important part is when are the deadlines and when do these organizations need to make a decision?
Right. So the program opened up, the Retire Ready New Jersey program opened up in June of this year and has two deadlines for employers. So for employers with 40 or more employees, the deadline to register or to indicate if you're exempt because you offer a retirement plan was September 15th. And so that's an active deadline. Employers have been getting notices if they have 40 or more employees, telling them either it's time to take action or that they've missed the deadline. For companies that have between 25 and 39 employees, the deadline is coming up in the next 2 weeks on November 15th. And so businesses that have 25 to 39 employees should be getting notices now, a letter from the program with an access code and directions to go to the website and to begin registering for the program.
Yes, and a couple of points that I just want to make is, again, do not take those letters and throw them in the garbage. If you have a retirement account, you still need to do something. So even though you have a 401k plan or you do have another retirement account, you get that letter, you need to go onto the website and you need to put in your tax ID number, your access code, and you need to say, I am exempt because I A, offer a retirement account, or B, I've not been in business for more than 2 years, or I do not have over 25 employees. And again, it's employees that are earning money in the state of New Jersey. So even though you're domiciled in potentially Pennsylvania or Massachusetts or Illinois, if you have 25 or more employees in the state of New Jersey, you must exempt yourself. Now that leads us to, well, what if I have company employees in multiple states? Well, you may have to exempt yourself out of multiple state plans. So you might have 20 employees in Connecticut, maybe 20 employees in Delaware, maybe 40 employees in Illinois. You would have to exempt yourself out of all of those states saying, I do have a retirement account. Some states like California and Delaware are as low as 5 employees with income in those states. Some are higher. But again, make sure you understand you may exempt you as an organization, you may have to exempt yourself in multiple different states. And again, the most important is you have to do something. So don't think that again, because you already have a plan, you're fine. You're going to have to do something. And again, every year, potentially, if you only have 20 employees or 15 employees, but you are hiring or you do have those seasonal employees, you may be not over 25 this year, but you might be over 25 next year. Again, plan accordingly. If you think that you should be getting a letter, you should be getting a notice, don't do nothing. You can go on the website, you can put in your tax ID number and say, I did not get an access code. They will find you and they will provide you that information. So again, be proactive as opposed to reactive. Okay, and again, penalties. Unfortunately, we talk about the carrot and the stick. We started with the carrot. Now let's talk about the stick.
Right. So maybe I can just give a quick overview here, Steve. So the way that the law is written is that businesses who are required to take an action, as Steve discussed, if they don't take an action by either registering for Retire Ready New Jersey or indicating they're exempt because they have a qualified retirement plan or are starting a qualified retirement plan, if within the first year after the deadlines have passed, then the state will be issuing a written notice to those employers who they don't see any activity from, or they don't see that they have registered for the program. And so that written notice, I mentioned earlier, the program opened up in June, will go out within the first year of the program being open. So at some point in the second quarter of 25, in the next year, businesses who the state has determined have not they don't know if they're exempt. They haven't exempted because they don't see that they've taken an action or haven't registered for the program will get a written notice from the state. In the second calendar year, the state has a series of fines that go up year over year for businesses that they don't see who have taken an action. And so starting after June of 25, that will begin the second calendar year. So the second half of 25, the state could send out fine notices to employers. And the second year fine is $100 per employee for a violation, which is just a violation is that you have not told the state that you have a qualified retirement plan or you are registered in facilitating the Retire Ready New Jersey program. And you can see those fines will grow year over year for those businesses who don't respond or take an action with the state.
Yes. And so, obviously when you're talking about, a 40, 50 life organization, that potentially could be a $10, $15, $20,000 fine. And we are seeing each state has different ways of implementing this fine. Some are doing it on a pure invoice basis. Others are reaching out to the Department of Revenue and going through state and federal income tax. So again, don't ignore, don't do nothing. You have to do something. Make sure at least you exempt yourself or you decide to make a game plan on what to do. And again, next slide in terms of what the employer responsibilities are. So like we mentioned, register with the program. Again, if you have a retirement account or you do not have 25 New Jersey-based employees, or you've not been in business for 2 years, exempt your organization. Or if you currently are offering a retirement account, exempt your company. Otherwise, your two options will be offer a retirement plan. Now, again, there are a significant amount of retirement plans that you can offer. A profit sharing plan, a simple 401k, a 401k plan, or you can register with the Retire Ready New Jersey plan. Again, if you do register for the New Jersey plan, basically your responsibilities will be to make those contributions through payroll deductions. Obviously, it is an auto-enroll program. So again, if people do not opt out of the plan, you will get an email as the plan administrator that you will need to deduct 3% out of their payroll. New hires as well, you will need to deduct 3% out of their payroll as well. So there is a responsibility as an organization to make sure you stay up to date on new hires and auto enroll and auto escalation. And again, you do need to maintain records for payroll, employees. Certainly that's something important that you're going to want to keep track of. Matt, any other quick tidbits that you'd like to mention here before we get into kind of wrapping up New Jersey Retire Ready?
Yeah, I just think that Steve's point is a good one. If you do receive a notice, take action, right? Make sure that you take action. And then if you do register for the program, it's an ongoing responsibility to facilitate the Retire Ready program, and that means making payroll deductions for your employees who don't opt out, and then adding any new employee who you hire, so those employees have the opportunity to save for their retirement as well.
Excellent. And quickly, just to wrap up, next slide, please. Again, now is the time that you need to do the due diligence. Now is the time you need to figure out what is best for you. Again, you need to look at overall costs of the plans. You need to look at administrative burden, what you're trying to accomplish as a goal of your organization. Again, there are a lot of benefits to Retire Ready, but there's also a lot of issues and a lot of concerns. Whenever we talk to organizations about dealing with Oregon, dealing with California, again, many organizations don't want the state to be a business partner of theirs. So again, now is the time to look at what you're trying to accomplish. Again, there's a lot of other retirement vehicles that will allow you to maximize owners' contribution, profit sharing contributions that allow you to reward benefits, recruiting and retaining new employees. Again, there's a significant amount of different options to choose from. Again, fiduciary pension partners, we're offering anybody who wants a complimentary one-on-one to go over your organization, what your goals are. We are offering a complimentary one-on-one to help assist on what potentially might be the best alternative and the best path for you. And finally, again, after this presentation, we will be sending you out a quick 5-question survey. Please respond to that survey, and we will make sure to get you out a Dunkin' Donuts gift card. So again, with that, I'll turn it back over to Rita to wrap everything up.
Okay, thank you, Steve, and thank you, Matt, for sharing your insights with us. I know that this is such an important topic for many of you out there who don't have a plan yet or are thinking, what do I do next? So as Steve said, Fiduciary Pension Partners is more than happy to set up a complimentary meeting with you to review what next steps you might need to take to ensure that your company doesn't receive those letters and that you're on point for where you need to be.